Welcome to Penrose Learning, where we make understanding easy.
You start by verifying you have an approved options trading level and sufficient margin. This matters because selling requires collateral and permission. Once done, fund the account to cover initial margin and short assignment risk, and enable market data for your symbols so quotes populate. Make sure you install and log into TWS or Client Portal. The order entry tools differ, so open the options chain for your underlying before placing any trade. You now build the trade. Open the options chain, pick expiry and strike guided by delta and implied volatility because those drive premium and risk. Next, choose a sell strategy, covered call, cash secured put, or credit spread, and calculate required collateral and max loss so you know the worst case outcome. Once decided, enter quantity and a limit price on the order ticket, set time in force, and choose smart routing. This preserves execution control while aiming for the premium you want. You execute and then actively manage the position. Watch fills and set alerts for big moves in implied volatility or the underlying since those change risk and margin. When threats appear, make adjustments, buy to close, roll out and up, or hedge with the underlying, because proactive moves prevent forced liquidation. If assigned, cover promptly to limit losses. If an order won't fill, try reducing your limit, splitting quantity, or switching routing. That fix usually resolves execution stalls.
Thanks for watching. If this was helpful, leave a like and consider subscribing. See you next time.